It is 9:14 a.m. Pacific Standard Time. It is the 20th day of November 2025, and this is episode 1215 of Bitcoin. And a security audit of Bitcoin Core has been performed. I'm going to tell you all about what we know, anyway, about that. It was funded by Brink, so this should be interesting. And according to this, it's the first time this has ever been done. However, honestly, this is open source software, so it's kind of been audited ever since it dropped. So we'll find out more, because that's why you're here. It's all the news you can use about Bitcoin and more going on around the world. And in fact, there is more going on around the world. 1 in 3 young investors switched their advisors because of Bitcoin. 1 in 3. 33% just said, no, I'm done with you telling me crap. William Hill from Samourai Wallet has been sentenced. So we'll talk about that one too. The Fed minutes came out yesterday, and it's rocking markets pretty much everywhere. And we'll talk about that one right before we end up in the middle segment where we run the numbers. And then coming out of that, we're going to talk about some long-term whales apparently are still holding. Van Eck has some kind of analysis on that. And then shareholder tools for Bitcoin activism. That's going to be kind of an interesting one. I'm looking forward to that one myself. And then Stratum V2 goes to Teraflux miners. Eridyne seems to be installing the Stratum V2 directly into firmware. So thank God. We've been needing Stratum V2 for a long time. We've had it out in production for a while, and now it looks like miners are stepping up to the plate. And then we're going to talk a little bit about Metaplanet, because they don't seem to be finished. Promise you, we'll figure it all out together. And first, we're going to start with this audit. From Bitcoin Magazine's Shinobi, Brink funds the first third-party security audit of Bitcoin Core by QuarksLab. I've never heard of QuarksLab, but we'll find out. Brink, the Bitcoin development organization, recently funded the first ever independent security audit of Bitcoin Core conducted by a third party, and the full report is available here, and of course that is a link. The audit was conducted by QuarksLab, a software security firm, with the help of the Open Source Technology Improvement Fund and collaboration with Bitcoin Core developers Nicholas Cow Ghee. I cannot pronounce his name. Cow Ghee, I think is how it's pronounced, but they're from Brink. And then Antoine Poinsot from Chaincode Labs. The security audit marks a milestone in the development history of Bitcoin Core, the most widely adopted and referenced client of the Bitcoin network and protocol. While Bitcoin Core security policies and practices have been steadily hardened and revised to be more thorough and comprehensive over the last few years, an external audit by a third party specialized in security review is a new bar to meet, and it was met. The audit involved manual code review, static and dynamic analysis with automated tools, advanced fuzz testing as well, which takes automatically generated input and runs it through different code paths, attempting to reveal unexpected or detrimental behaviors. No critical, high, or medium severity bugs were discovered in the audit. There were, however, 2 low severity issues. They were different. And then there were 13 other issues that are not classified as vulnerabilities under Bitcoin Core's vulnerability classification criteria. The entire process also resulted in improvements in Bitcoin Core's testing infrastructure, including new fuzz testing infrastructure for block connection and chain reorganization scenarios, a new area to be covered by testing, file system improvements, speeding up and improving fuzz testing in general, new utilities for testing backsliding code performance, and suggestions for improving code readability for reviewers and new developers. Some of these improvements are already being worked on for eventual review and merging into the Bitcoin Core repository. The results of this independent security audit have reinforced that Bitcoin Core's improvements over recent years in security policy, testing, and overall quality review have had a meaningful impact on the project. So I don't really know what to say about this, because I'm pretty much sure that fuzz testing has been part of Bitcoin Core testing for a while. The only thing about this that looks like it's any kind of different is that it was done by a third party that has, well, not as much to do with Bitcoin as the actual Bitcoin Core development group. Still, though, I think it's important for us to understand that this isn't the first time Bitcoin Core has been tested, has been audited, has been looked at from every possible direction that you can look at it from. It's been live in production since January 3rd, 2009, and it is a free open source software protocol. Anybody can look at the code, and anybody has looked at the code several times. So I wish Shinobi would have put something about that in there, because it almost sounds like to a newbie, it almost sounds like, holy shit, this has never been tested before. Yes, Bitcoin Core has been tested 8 ways from Sunday. It's always been fine. It's interesting that they've performed a third-party audit, but please understand, this thing's been audited many, many, many times before. Okay, moving on. Jesse Coughlin from Cointelegraph: 1 in 3 investors switched advisors over crypto access, according to a survey. All right, well, I can totally believe it. Money managers may need to rethink their approach to digital assets, with over a third of young, wealthy investors in a recent U.S. survey indicating they had moved on from advisors who don't offer crypto exposure. Crypto payments provider Zero Hash's survey of 500 U.S. investors between the ages of 18 and 40 years old, released on Wednesday, found that 35% of them had moved money away from advisors who didn't offer access to crypto. Those surveyed had incomes between $100,000 and $1 million, and more than half of those who moved money due to an advisor's lack of crypto offerings said they had moved between $250,000 and $1 million. Crypto has only recently enjoyed an ultra-friendly policy environment in the U.S., and some wealth advisors are still playing catch-up as younger investors are less risk-averse compared to past generations. Zero Hash said that over 4/5 of those surveyed said their confidence in crypto was boosted due to its adoption by major finance institutions such as BlackRock, Fidelity, and Morgan Stanley. Zero Hash found that respondents with incomes of $500,000 and up were leading the exodus, with half moving, or rather, with half having moved from advisors over crypto access. The survey also found that 84% of all the respondents plan to increase their crypto holdings in this next year, with nearly half saying that they would increase their allocation significantly. Zero Hash said the findings show that crypto has become essential to modern portfolio strategy, and many wealthy investors are just not waiting for their private wealth managers to catch up. Quote, advisors who adapt early can strengthen client loyalty and capture new growth, while those who delay are risking falling behind. End quote. They added that investors were clear with their expectations and wanted insured, compliant crypto access. Zero Hash said, based on its survey results, its playbook for advisors to win investors is to offer crypto on the same dashboard as traditional assets with insured custody. Quote, investors expect more than Bitcoin and shitcoin number one. 92% say access to a broader range of digital assets is important. Meanwhile, asset managers have begun offering exchange-traded products with exposure to a wide range of shitcoins, with products tied to altcoins, including, and then they list a bunch of shitcoins. Then there's more novel products featuring staking, which rewards users for locking up tokens to secure a blockchain. Yeah, that's what they tell you it's there for. That's a bold-faced lie. Staking is it's just a form of grift. I'm sorry. If you're out there thinking that you're staking your Solana or your Ethereum and it's, because you're securing the blockchain, you're not. That blockchain is secured in a completely different manner than what anybody's being told. It just is. Only proof of work matters. I'm sorry, but that's just the way it is. So there's a couple of takeaways here. One is that, traditional wealth managers are starting to lose their clients over refusing to understand what these products are. Two, and more importantly, this is exactly why shitcoins will always be with us. Did you hear that freaking sentence? Investors expect more than Bitcoin and shitcoin number one. 92% of these people that have been surveyed say they want access to a broader range of digital assets and that's important. Honey, a broader range of digital assets just means a whole slew of half-baked shitcoin projects that are purpose-built to steal your money. Don't get into all this, please, for the love of all that is holy and right and good in the world, which the following is not right and good in the world, because Samourai Wallet CTO William Hill has been sentenced to 4 years in prison. Vismaya V from decrypt.co is going to tell us about it. A New York judge on Wednesday sentenced Samourai Wallet co-founder William Longergan Hill to 4 years in prison, the second conviction in a case crypto advocates say threatens software development freedom. Judge Denise Coate sentenced the 67-year-old, I didn't realize he was 67, 67-year-old developer to 3 years of supervised release and imposed a $250,000 fine, according to a statement with the U.S. Attorney's Office of the Southern District of New York. That sentence comes 2 weeks after Samourai Wallet's co-founder Keone Rodriguez was handed a 5-year prison sentence and a similar fine. Rodriguez and Hill pled guilty in July to conspiring to operate an unlicensed money transmitter after prosecutors agreed to drop more serious money laundering charges. The sentences the defendants received send a clear message, this is a quote, a clear message that laundering known criminal proceeds, regardless of the technology used or whether the proceeds are in the form of fiat or cryptocurrency, will face serious consequences. U.S. Attorney Nicholas Ruse said in a statement. I'm pausing just to say Nicholas should probably go read the Blanche memo again, which stated that the DOJ under Trump was not going to prosecute anything like this. Please understand that what we have is a giant hypocrisy. It doesn't matter if you like Trump. It doesn't matter if you hate him. It doesn't matter if you're neutral. The facts are this. The Blanche memo stated clearly that the DOJ was not going to prosecute this type of shit anymore. And here we are with a massive prosecution of Samourai developers, and both of them sentenced to 5-year and 4-year prison sentences, respectively. It's a hypocrisy. There's no sugarcoating it. There's no painting this little child's picture in different colors to make it say anything other than what it is, hypocrisy. It was a bold-faced lie that the Department of Justice handed us, and we bought it hook, line, and sinker because we were blinded by what? Oh, we're going to do a strategic Bitcoin reserve. Oh, we're not going to do things the way the Biden administration did it because those guys sucked. No, and we got what? Lied to again. Different guy, same shit. It's ridiculous. But continuing on, authorities also said Samourai Wallet users relied on its Whirlpool mixing service and Ricochet, Hop adding tool to obscure Bitcoin transactions, moving more than 80,000 Bitcoin worth over $2 billion and generating $6 million in fees. Prosecutors also presented evidence that Hill promoted Samourai on the darknet forum Dread as a way to clean dirty BTC, while Rodriguez encouraged Twitter hackers in 2020 to use Whirlpool and describe mixing in Messenger WhatsApp as money laundering for Bitcoin. Yeah, that was not a smart move. That was just dumb. Oh shit, there's an autism defense. Oh, interesting. Hill's defense attorney argued his client's recently diagnosed autism impairs his judgment, giving him a, quote, magical thinking autistic view that non-custodial tools insulated him from legal liability, according to the Rage's report. Oh, shit. They're using an autism defense. Interesting. While Judge Coate acknowledged the diagnosis would make prison more difficult for Hill, she rejected flat-out claims that minimized the crime, stating people should be deterred from such actions. She then reduced the sentence from the prosecution's requested 60 months to 48 months. So the autism defense bought him a year. That's what that did. And, hey, a year's a year. Hill will start his sentence January the 2nd next year, while Rodriguez must surrender to law enforcement custody December the 19th. Privacy advocates earlier told Decrypt the case would carry sweeping implications on developers' ability to write open source software while being free from fear of persecution. Kadan Stadelman, chief technology officer at Komodo Platform, told Decrypt that the Samourai ruling points to a double standard in financial enforcement and that targeting privacy tools is a two-tier justice system. U.S. authorities have, quote, made it clear that they do not want crypto users to enjoy privacy, he said, calling the ruling a chilling moment that treats Samourai's cash-like privacy tools as criminal. Stadelman noted the United States government is making an example of the Samourai founders and said the industry must push for presidential pardons while continuing to build decentralized tools to fight back against the surveillance state. Rodriguez has launched a petition calling on the president, or President Donald Trump, to pardon both developers. Quote, developers shouldn't be liable for the actions of bad actors using their software, Rodriguez tweeted on Wednesday. And I agree with that wholeheartedly. If you are going to develop privacy tools in the monetary context, please don't go on Twitter and say this is like money laundering for Bitcoin. That's not helpful for you. It's also not helpful for the wider ecosystem, but it's certainly not helpful for the developer. And as always, my second piece of advice here, don't use your own name. That is always the question in free and open source software. And it's not like you got to pay for Samourai. I can go get it right now. I can go get Whirlpool. I can spin one up right now. They didn't close it down. They can't because it's free and open source software and it's running everywhere. If you're a developer of free and open source software, why is it critical to use your own name? Can anybody answer that question for me? Because it seems odd. It almost seems like, I mean, I can see you using your own name if you're developing a piece of software that you're going to copyright and you're going to sell, and you need to make sure that you're the one that gets the money for the sales because it is your intellectual property and you've got the copyright on it and you've got sales rights and all that kind of stuff. Yeah, you're going to need to use your own name. I get it. But if you're not planning on doing any of that and you're going to release it out into the wind for everybody to use as free and open source software, then why put your name on it if not for being able to tell people, see what I did? In a way, there's a way of, I guess, maybe building reputation or some kind of networking wealth, not money wealth, not monetarily, but like networking wealth because you're using your name. Why not just use a NIM? I mean, I'm not even sure if like some of the names that I know in this space, if they're actually the real names of people. There's a couple that we've already found out aren't their real names. That's fine. Do that. Or people like Shinobi. I know his name is Brian Trolls, but I don't even think that's his real name. And that's okay. I don't want to know his real name. I don't need to know who the hell Shinobi is because I know who Shinobi is. Shinobi presented himself as Shinobi or as Brian Trolls on like one of the very early Bitcoin podcasts. Now he's like, I guess, editor-in-chief over at Bitcoin Magazine. I mean, I guess, I'm not exactly sure about that, but I know he works for Bitcoin Magazine. I don't need to know his real name. I know who he is. So again, I implore you, please educate me why, in the context of developing free and open source software, people find it necessary to use their real God-given legal name. It doesn't make any sense to me. I don't like it. But you know what I do like is GreatGhee. GreatGhee.com. Over at GreatGhee.com, you can get the greatest of ghees from GreatGhee.com. It's clarified butter, yo. And you make it by simmering butter to remove all the water, all the milk solids, of which there is quite a bit left, and any impurities. Because, yes, there are impurities in butter, like little bits of dust. I mean, hey, food is food. Especially with animals that eat hay and stuff. It's gonna happen. It's just gonna happen. And the way that you get rid of all of that crap is you clarify it by simmering the butter for quite a while until you get a clear, golden, lactose-free oil with a nutty flavor and a high smoke point. And unlike regular butter, ghee is shelf stable, which means at room temperature, you can keep it on the shelf. After you open a jar, you can still keep it on the shelf. If you're going to be using it for a very long time, like you're planning on keeping it around for months, you might want to refrigerate it. But if you haven't opened it yet, you can keep it at room temperature for years and it will be fine. It's part of the food preservation stuff, right? So GreatGhee is the one that does it, and he makes his ghee by hand from some of the best milk that you can find. I mean, it's like, let me see, where does it say? Oh, I can't, it's not where I remember it, but it's like 100% grass-fed milk. He's starting with the best of ingredients to make ghee over at GreatGhee.com. Make damn sure that you use the code BitcoinAnd. That way you get to tell GreatGhee that I made a sale for him, and GreatGhee needs to be able to know that so he can figure out whether or not and how much and how many Satoshis he sends me given the value of the sale that I made for him. Use BitcoinAnd, the code BitcoinAnd over at GreatGhee.com. Get yourself some ghee. Do it now. Do it now. Do it now. That's GreatGhee.com. All right. Bitcoin attempts fragile lift, which didn't work, by the way. This is old enough to no longer be relevant, but it does have some other news here. Bitcoin attempts a fragile lift as the Fed signals patience on rate cuts. And that's why you're seeing the dump this morning. It wasn't a dump when this came out, but it's a dump now. So let's find out a little bit more about what's going on here. Hold on. I need to check something here. Yeah. So I'm not going to read all of it. I want to read this particular part before we break to run the numbers. Fed keeps conditional stance. That's the hawkish language. It's not exactly hawkish, but it sure as shit ain't dovish. So how does that break down? Well, the Fed's minutes offered very little clarity for traders hoping for a December rate cut. While inflation is improving, officials emphasized, quote, confirmation before cuts, signaling that easing remains possible. It's possible. Oh my God, it's possible, but it's not guaranteed. And nobody wanted to hear those last two words, not guaranteed. That's why you're getting everything is bleeding to death today. It ain't just Bitcoin, so just understand that. BRN's Messire said that the conditional messaging has weighed on broader risk sentiment, preventing markets from building a one-way trade around imminent policy support. NVIDIA's earnings, however, delivered the opposite effect, boosting sentiment in tech and giving risk markets a short-term lift. The chipmaker reported fiscal third quarter revenues of around $57 billion, with guidance towards $65 billion for the next quarter, helping stabilize risk assets after Tuesday's crypto-led drawdown. Quote, Bitcoin has been all over the place in the last 24 hours, pulled in different directions by conflicting news, said Nick Puckrin. I love that name, Puckrin, co-founder of the Coin Bureau. Quote, if the positive mood in tech continues into the weekend, Bitcoin will likely follow. Bitcoin has been down for over 7 days. So today's move higher could mark the start of a reversal. Narrator, it didn't. It's okay. Nobody jump off a cliff. We've been here many times before. In fact, a lot of you guys that are out there have actually already seen this, just at different price levels, so you don't recognize it. But if you look at a percentage drop over the last 4 weeks or however long we've been going through this garbage, you'll look at it and go, wait a minute, I've seen those same drawdowns before. Yeah, not at when they're starting at $26 or $126,000. You haven't. That's why it feels different. But if you look at it from a percentage drawdown, most of you listening to my voice have already been through this, and you don't even know it. It's amazing. Anyway, Puckrin highlighted 107,500 as the next resistance level if upside momentum builds, in 75K as a strong downside support zone should macro jitters intensify. And, honestly, freaking who knows? But there's more to the story before we run the numbers. Something old, something new. September payrolls, jobless claims, and home sales, according to the Philly Fed, have actually finally dropped. So this is not helping, right? Because this is like old data that we should have already gotten, but due to the shutdown, we didn't get. And now that the government's back open for business, here they come. And what does it look like? Well, starting with the Labor Department's history report on September payrolls, the U.S. economy added 119,000 jobs. Oh, well, that's good news. And that was more than double analyst expectations. Okay, well, that's also good news, except it basically feeds the Federal Reserve's decision on if and when they make any more rate cuts. And that didn't help. Because again, and I've said this many times before, Jerome Powell can stand firm and say, see, it's working. We're getting jobs. Except we all know those numbers are a fucking lie, right? Because the number stands in the shadow of downwardly revised August data, which now shows a loss of 4,000 jobs rather than the 22,000 added jobs originally reported. Can anybody trust these numbers at all? So we've got a report in our hands that say we added 119,000 jobs, more than double analyst expectations, yet the month before, instead of adding a mere pissant 4,000 jobs, we actually lost 22,000. Nobody should believe any of these numbers. And that's got to make Jerome Powell's job and all the rest of the Fed governors' jobs very, very difficult. How do you know what the hell's going on? How do you even know what's working? How would Jerome Powell be able to stand in front of Trump and say, see, it's working, when you've had to downgrade by a lot an entire jobs report? See, everything is a lie. Everything is a lie. Everything is a lie. But it also marks only the fourth upside surprise for the last 12 months. Digging beneath the headline, the service sector was responsible for 89.7% of private sector job ads. What we're seeing here is the first glimpse of a jobs report since the government shutdown, and it certainly is not reflecting what may have happened in the month of October and what's presently happening now in November, Peter Cardillo, chief market economist at Spartan Capital Securities, tells Reuters. The report also gave markets a second glimpse at September inflation, showing average hourly wages rose by 0.2% on a month-over-month basis a cool down from, August upwardly revised 0.8% growth. Year over year, wages increased 3.8%. Quote, we are monitoring the impact of immigration policies to those industries like construction and leisure and states like Texas that are the most exposed. These dynamics are likely to pressure wages and keep inflation higher than target. The jobless rate unexpectedly inched higher to 4.4%, while the labor market participation rate improved to 62.4%. That makes sense because when workers jump back into the labor pool and start looking for work, they are then counted among the unemployed. Quote, this leaves a December easing still in play with payrolls rising briskly, but the unemployment rate picking up and matching our above consensus forecast, said Samuel Toombs, chief U.S. economist at Pantheon Macroeconomics. Quote, we think September's payroll estimate greatly overstates the strength of labor demand. All right, so this is what happened yesterday when the Fed minutes dropped. This is what we were given. It's not just the Fed minutes, but all these other things just came all out of the woodwork. It was like a punch to the face of markets around the world. Bitcoin caught it square in the chin, but dude, it's not like it's the only thing that's having issues today because of these numbers. What really disturbs me is the fact that we keep thinking or we keep listening to the Fed when they give us labor statistics, and then they turn right around and say, yeah, none of that shit was true. I'm sorry. A 26,000 job adjustment in a month from somebody who has the tool set of the United States government to bring to bear on putting these reports together is reprehensible. You either knew or you should have known exactly how many jobs we had, and you didn't. Let's run the other numbers. CNBC futures and commodities. Brent North Sea is down 0.6% to 63.13 a barrel. West Texas Intermediate oil is down 0.79%. Back to 58.97 you go. Natural gas is the hedge, and it's green, right? 0.79% to the upside, $4.58 per thousand cubic feet. Gasoline is down 1 1/3 to $1.90 a gallon, and Merbon crude is down 0.4 to 64.61 a barrel. No escape for shiny metal rocks either. Palladium down 1.5, gold down 0.8, still holding above 4,000, but barely 4,050. Platinum is down 2.8%, getting kicked in the crotch there. Silver down 1.6, and copper is down 0.74%. Meanwhile, ag is mostly in the red, but there are some green ones here. Chocolate is up 2.8%. It's our winner. Our biggest loser of the day is wheat, 1.14% to the downside. Live cattle is down another 1.17% today, but lean hogs is up another 0.8%. Feeder cattle down 2 points. And here we go. Legacy equity markets, starting with the S&P, down 0.8%. NASDAQ is down 1 1/3. The Dow is down 2/3 of a point, and the S&P Mini is down just over a full point. I'm telling you, nobody is surviving these numbers. And Bitcoin is having problems too. 86,680. Wow, was that a palindrome? Almost. $1.73 trillion market cap. We can only get 21.5 ounces of shiny metal rocks with our one Bitcoin, of which there are 19,951,182.41 of. And average fees per block are normal, 0.03. BTC taken in fees on a per block basis. It's about 25 blocks carrying 37,000 unconfirmed transactions waiting to clear at high priority rates of 1 Satoshi per VByte. Low priorities are the same. Still in zettahash territory for hash rate on the Bitcoin network, 1.05. It's down a little bit from yesterday, but it is still zettahash. Miners are still plugged in, 1.05 zettahashes per second. It's the hash rate on the Bitcoin network. From cracking up Kenya, yesterday's episode of BitcoinAnd, I got, oh, wow, Daniel. It's Daniel. Hold on for a sec. My apologies. I got a phone call that I just had to take, so I kind of interrupted me. So where was I? Oh, yes. Cracking up Kenya, yesterday's episode of BitcoinAnd, I got boostograms, and I got one from my good friend Daniel Prince. Daniel Prince says, with 1,000 sats, says, y'all know Cantor Fitzgerald merged with the company that specializes in tokenization, right? Right, guys? They are called Securitize. Yes, the same Cantor Fitzgerald backing a Bitcoin treasury company, and that he's got that in quotes. Yes, the same Cantor Fitzgerald whose CEO is also the sitting Secretary of Commerce. Wake the fuck up, people. They want your Bitcoin. Stay humble, stack sats, self-custody, opt out of this fiat hellscape. Great work as always, Dave. Thank you, Daniel. I appreciate that. If you don't know who Daniel Prince is, he's host of the Once Bitten podcast. Again, that's the Once Bitten podcast. Daniel Prince does a really good job with that podcast. It's one of my favorites. I love it. I've been on that show, I think 3 times, He's always great to talk to, and he has had many guests on his show over, I think he's been doing it for as long as I've been doing this one. So we're sort of in this together. So hats off to you there, Daniel. Paul Cernine with 500 says, thanks again for another insightful episode. Tokenization is a much bigger topic than generally understood. If David Rogers Webb is correct, it will fundamentally change property rights, and by this, transform society globally. Keep watching this issue. If I may suggest, maybe you could do a special episode on this. And keep up your good work, which is always greatly appreciated. I'm still looking forward to your next Cathedral episode. Till then, I will always hear you on the other side. Paul, much appreciated the 500 sats. Also, I keep meaning to turn out this particular episode of the Cathedral series, but it's much more difficult than I imagined. I can see it clearly in my head, but it's very difficult to articulate verbally, and it's one of those things where it's like, that's where the rubber meets the road. Being able to translate what you see in your head that you see plainly to somebody else who can't see it at all. There's a real talent in that. And I'm on a lifelong journey to hone that talent. I'm okay at it, but I got to get much better at it. I promise, Paul, it's coming out. I just gotta bust it out, man. Nick Dose with 106 sats says cheers. Jason High with 316 sats says John 3:16. It's the book of John in the Bible, in the New Testament, chapter 3, verse 16. You might want to go read that one. Tulips with 500 says tulips. Dude, banks are coming for our savings, either through tokenization, CBDCs, or stablecoins, which we will just call dollars eventually. In Europe, the population is totally docile and domesticated, but their leaders are fucking tyrants. Slow erosion. In Latin America and Africa, shit is wild and the people unruly. The contrast will provide the best social experiment ever devised once Bitcoin takes hold, and we have the best seats to watch it play out. The status quo is just tulips, and it's going to zero. Nakaz18 with 210 says, great show. Live aloha. Pies with 121 says, thank you, sir. No, thank you. Is that it? Yep, that's it. That's the weather report. Welcome to part 2 of the news that you can use. Van Eck, mid-cycle traders driving Bitcoin sell-off while long-term whales keep on a-holding. Micah Zimmerman writing for Bitcoin Magazine. Bitcoin's recent decline excuse me, is being driven by mid-cycle hodlers, not long-term whales, according to new on-chain research from Van Eck analysts. The firm noted in a recent report that long-term hodlers continued to accumulate. while short-term futures markets show deeply oversold conditions following tariff-driven liquidations. Despite widespread speculation that early Bitcoin whales triggered the sell-off, on-chain data shows that coins held for 5 years or more continue to rise. These older cohorts increased their holdings by roughly 278,000 Bitcoin over the past 2 years, signaling limited turnover among wallets with the longest histories. In contrast, supply among wallets that last moved their coins 3 to 5 years ago has dropped for every measurement window. Over the past 2 years, this particular tranche fell by 32% as coins were transferred to new addresses. The Van Eck analyst view these sellers as cycle-driven traders rather than long-term investors. The past month delivered a negative 13% drawdown, driven in part by outflows from Bitcoin exchange-traded products. Since October the 10th, Bitcoin ETP balances have fallen by 49,300 Bitcoin, which is about 2% of total assets under management, as recent buyers exited positions during rate cut uncertainty and the shifting AI market sentiment. Sentiment indicators also show rising fear among retail participants. Bitcoin's fear and greed index fell to its lowest reading since March, aligning with the onset of tariff-related volatility. Whale holdings are shifting in a more nuanced pattern than outright distribution. Large hodlers with 10,000 to 100,000 BTC have reduced supply over the longer term, down 6% over 6 months and 11% over 12, while mid-size hodlers in the 100 to 1,000 BTC range absorbed this supply and increased their balances by 9% and 23% respectively over the same periods. More recently, some large cohorts have turned into net buyers. The 10,000 to 100,000 BTC group increased holdings over the past 30, 60, and 90 days, coinciding with a sharp drop in futures market open interest during tariff-driven liquidations. While the analysts stopped short of making directional predictions, the data shows that the longest-term Bitcoin holders remain largely in place. Mid-cycle traders are driving the selling, and the futures markets have undergone a significant reset. After a month of pronounced liquidations, the analysts characterize current conditions as, quote, aligned with prior periods of tactile re-entry for some investors. When analyzing coins by age rather than wallet size, selling pressure is most concentrated among holders who last moved their Bitcoin within the past 6 months to 5 years. These groups saw significant outflows over the past month. Holders in the 6-month to 2-year band have rotated into the market as sellers, while the 3 to 5 year cohort continues to shrink across all periods. Reviews, analysts connect this behavior to traders who entered during prior down cycles and are now exiting on price weakness. So they bought in at the same time that they're selling out. Good job. Excellent work for being neutral this entire time. You get nothing. You win nothing. Nothing. Good Lord. By comparison, coins that moved or last moved more than 5 years ago, those show minimal churn, reinforcing the idea that long-term holders are not the ones driving this sell-off. So you can do with that what you will. We talked a little bit about that yesterday. This is a little bit more detailed of a report of what's going on. But yeah, this tracks with pretty much every single other time that we've seen a 35% drawdown. People that got in at the top are like they don't know how to hold. They don't have the patience. They don't have the long-term view. They're still programmed by all the toxic bullshit programming that we've all come to know and love, that was our childhood, our parents' childhoods, and their parents' childhoods as well. Yeah, their company's going to take care of you. You got to have a retirement plan. You got a 401k. have life insurance because everything bad in the world is going to happen to you, and you got to do this and you got to do that, and you can't take a breath. And every single thing that we've been told is actually a lie. So it doesn't surprise me that these people, which basically represent the exact same cohorts as every other time that we've seen a drawdown like this, are the first people to cut and run because honestly, they don't know how to do it. I was about to say spineless, but that's not it, right? That's being derogatory, and that's not fair. I don't know if they're spineless. I'm sure that there are some spineless people in there, but there's got to be other people in there who just don't care the way that you and I care. You know, the world that they see isn't as bad as the world we see. Maybe they're the guys that are sitting on the sunny side of the bus in that meme, and we're the ones that are looking at the rock wall. I don't know. One thing I do know, though, I am just as clear in my own soul about this as I can be. This fiat system needs to die because we have absolutely wrecked the money. But how many of us understand it that way? The answer is, I don't know. There's no way to know. But there is some activism going on in the Bitcoin space, and apparently we got tools for them. Bitcoin Magazine's Nick Ward is writing this one. These new shareholder tools make Bitcoin activism easy to launch and hard to ignore. Now, I stumbled several times with what the hell are shareholder tools when it comes to the context of Bitcoin activism. I finally figured it out, and so will you, by reading this for most of my life. The limiting factor in bringing my ideas to life has been code. I've always had a clear vision for the tools I wanted to build, but the execution gap was real. The ideas stayed on whiteboards, in notebooks, and in half-finished Photoshop mock-ups. That barrier no longer exists. AI has collapsed it. In just 9 days, I built 2 fully functioning consumer applications designed to equip shareholders with the leverage that they've never had. The ability to advocate cleanly, credibly, and at scale for Bitcoin on the corporate balance sheet. These tools weren't commissioned. No one told me to build them. They are not fancy, intricate, or technically complicated. They came from simple observations. 1, corporations control the majority of global capital, and 2, shareholders deserve a frictionless way to push those corporations towards strategic, long-term Bitcoin adoption. So first up is the Bitcoin Treasury Simulator. The Bitcoin Treasury Simulator answers a question that should be trivial but wasn't. How would a company have performed if it had allocated even a portion of its treasury to Bitcoin? Retail investors can now enter a ticker, choose a time frame, and instantly see the opportunity cost of holding cash instead of Bitcoin, expressed in clear, defensible terms that anyone can understand. For the first time, shareholders have a factual, data-driven tool that they can bring to corporate boards, IR teams, and fellow investors to show exactly what's at stake. And you can try that simulator at simulator.bitcoinforcorporations.com, simulator.bitcoinforcorporations.com. The next is the Bitcoin Treasury Shareholder Activism Kit. The Shareholder Activism Kit has always been powerful, but it's been inaccessible to most investors. The rules are complex, the legalese is intimidating, the entire process feels like a wall you only get past if you're a lawyer on $1 billion fund. So I built a generator that removes all of that friction. The Bitcoin Treasury Shareholder Activism Kit walks any verified shareholder step by step through generating a legitimate SEC-compliant proposal asking a company to evaluate or adopt a Bitcoin Treasury strategy. It produces the documentation, all of the language, the filing structure, and the instructions needed to get the proposal included in the company's proxy. Something that once felt like it required attorneys and institutional resources can now be completed within 2 minutes. Why do these tools exist? Corporate Bitcoin adoption does not happen by accident. It happens because someone, inside or outside the company, pushes for it with clarity, precision, and persistence. These tools are built for the people willing to make that push. They give shareholders clear data, a credible filing pathway, a structured way to change corporate behaviors, and the confidence to take action without needing permission. What comes next? Because this is just the beginning, both tools will evolve, expand, and integrate more deeply into the broader Bitcoin for Corporations ecosystem. But the important part is this: AI has made technical hurdles of these projects much easier to overcome. And if enough people decide to build the future they want, one tool at a time, we accelerate corporate Bitcoin adoption far faster than anyone expects. Okay, given what we've been seeing over like all these Bitcoin treasury companies, the decline in the price, all the stuff, and we're going to get into Metaplanet at the end of the show, all right? I understand that you're going no more Bitcoin for corporations, and all I can say is, well, too bad, because if they want to buy it, they get to buy it. And there's not a damn thing we can do about it. But now there's a couple of actual tools that this guy has written where you can do that. The Bitcoin Treasury Simulator and the Bitcoin Treasury Shareholder Activism Kit. And whether or not you love the idea or you hate it, this is just one of the kinds of tools that people are using artificial intelligence to build. Have I used it? The answer is no. So I don't know. And not only have I not used it, I haven't even looked at it yet. I haven't even gone to simulator.bitcoinforcorporations.com. I haven't looked at sorry, I forgot to say this one, kit.bitcoinforcorporations.com. So there's kit at Bitcoin for Corporations, and then there's simulator.bitcoinforcorporations. And I haven't looked at either one of them. And I haven't generated documents out of either one of these things to send to my sister, who is pretty steeped in corporate law, to see, is this all bullshit? Because she would know. She's seen these documents before. I mean, she was, mergers and acquisitions for a lot of different companies. So she's been in that churn for a lot of her professional life. And I very well, if I get the time, I'm going to do this, but still, you can build whatever you want. In fact, if you hate Bitcoin for Corporations so much, then use AI to build your own tool to talk people out of buying Bitcoin for Corporations. Talk corporations out of it. I mean, it's like we don't know the nuts and bolts of these particular applications that have been built. So we don't know exactly how these things are structured. I'm not saying anything bad about this guy. I'm sure it's completely above board, but I am saying that I know that there's people out there that are so tired of the Bitcoin Treasury Company strategy bullshit that they don't want anybody else doing anything to make it easier for people like Michael Saylor to get even more Bitcoin. Because yes, and I agree, it is a dangerous situation. So if that's your bent, then you too can use AI, just like this guy did, to build the antithesis applications for this. And that's not even the point. I'm not saying this that you guys can go throw down on the battlefield. I'm just saying this is one of the things that AI is useful for. We don't have to be terrified of these things all the time. We don't have to be terrified of AI. We don't have to be terrified of robots. We don't have to be terrified of anything that is going to end up being inevitable anyway. The faster we learn how to embrace it, the more graceful we are at our use of it, we can probably do some really great things. I don't think it's pie in the sky like Elon Musk saying yesterday that AI and robotics is going to wipe out poverty. I don't believe that shit for a second. How do I know? Because Jesus told me, the poor will always be with you. I'm pretty much going with that one. All right. But that said, you don't have to be scared of AI. And if you hate the thought of corporations buying more Bitcoin, then build the opposite of these tools. You can do it. This guy did it. Well, let's talk about Auradine. They've brought native Stratum v2 to its new teraflux miners, Atlas 21. Let's go. Auradine has announced native support for Stratum v2, which is now fully integrated into its new line of original equipment manufacturer teraflux miners. Stratum v2 represents the evolution of communication in the mining industry. The protocol, featuring a modern, binary, and encrypted architecture, delivers improvements in performance, resilience, and reliability while addressing the long-standing vulnerabilities of Stratum version 1. With Stratum v2 implemented directly into FluxOS, Auradine's proprietary operating system, operators no longer need custom modifications of risky third-party software interventions. Sanjay Gupta, Chief Strategy Officer of Auradine, stated, quote, "Our native Stratum v2 integration sets a new benchmark for the mining industry." Sorry about that. My cat's deciding to play with something on the stove. Our native Stratum v2 integration sets a new benchmark for the mining industry, providing unparalleled security and efficiency built directly into every system. No other manufacturer is delivering protocol-level protection at this scale, end quote. To bring this integration to market, Auradine worked closely with the teams at Stratum v2, DMND, and Brains. So there you go. We've got somebody who's done a full integration of Stratum v2 directly into their miners. You don't even have to upgrade anymore. Now, on to the last piece of the day, Metaplanet. Yes, I know, but you've got to be aware of what's going on here. Metaplanet eyes $135 million raise via new Class B shares to fuel more Bitcoin buying. Amin Hashquanis from Cointelegraph. Metaplanet is preparing yet another major capital raise through the issuance of its new Class B perpetual preferred shares to expand its Bitcoin-focused treasury strategy. According to filings submitted to the Tokyo Stock Exchange, the firm plans to issue 23.6 million shares of Class B at 900 yen, or $5.71 apiece, bringing the total raise to 21.2 billion yen, or $135 million. The offering will be executed through a third-party allotment of overseas investors, pending approval at an extraordinary shareholder meeting set for December 22nd, 2025. It just means that's not a normal shareholder meeting. It's not like it's, oh my God, this is awesome. The chicks are so hot. The charcuterie board is so well. No, it's not extraordinary that way. It's just not at the usual time. The new Class B shares come with a fixed annual dividend of 4.9% on a $6.34 notional amount, translating to about 7.8 cents per quarter once regular payments begin, and hodlers will have the right to convert the preferred shares into common stock at $6.34 conversion price. However, the company retains a market price call option that can be exercised if the stock trades above 130% of its liquidation preference for 20 consecutive trading days. The shares are non-voting but carry redemption rights under specific events. The capital raise is paired with a broader restructuring of Metaplanet's financing instrument. Let's read it again. The capital raise is paired with a broader restructuring of Metaplanet's financing instruments. That didn't take long, did it? The company plans to cancel its 20th through 22nd stock acquisition rights and issue new 23rd and 24th series rights to Cayman Islands-based investment fund Evo Fund, subject to regulatory approval. In an accompanying post on X, Metaplanet CEO Simon Gurovich revealed that the company's new Class B perpetual preferred equity program is now called Mercury. The Mercury program. It was just, how do we get men into space? Not to the moon, that was Apollo and stuff like that, not to the moon, but just to orbit the Earth. That was the Mercury program in NASA, and Metaplanet seems to have pilfered that name for their own uses. Anyway, quote, 4.9% fixed dividend, 1,000 yield conversion price, a new step in scaling Metaplanet's Bitcoin treasury strategy, Simon Gurovich wrote. And he's got a cute little post here with some AI obvious art that announces the Mercury program. Metaplanet convertible for return and yield. Yep, well, where's the yield coming from? Anyway, Metaplanet shares ended the day up by 3.2%, gaining 12 points. However, the company's stock is down by over 60% over the past 6 months, according to data from Google Finance. Metaplanet, which is the fourth largest public company globally in Bitcoin holdings, now holds 30,823 Bitcoin, worth only $2.8 billion at the time the company acquired its stash at an average purchase price of $108,000. So they're 100% underwater on their Bitcoin. I wish it wasn't so, but I'm not going to sugarcoat it anyway. I mean, it's like, but except to say, we've been here before. We've done this before. We've done this several times. And it doesn't mean that you can't be sad about what's going on out there in the world of Bitcoin. But, if you get emotional about money, remember what Gordon Gekko said, never get emotional about money. Yeah, don't. That's when people make their worst mistakes ever, because somehow or another, your entire history of Bitcoin is being compressed into just a few days. I'm not talking in terms of value. I'm talking in terms of experience. Your entire experience in Bitcoin is being crushed into just a few days. Okay, I'll give it to you a couple of weeks, But usually, generally speaking, it's more like every hour. Every hour that ticks by, your entire experience of any market, it doesn't matter if it's Bitcoin or not. Here it's Bitcoin, so we'll just say that. Your entire, like let's say you've been in since 2015. Let's just put it at 2015, like where I got in, right? My entire experience is compressed, and I feel everything that happened to me in the 10 years that I've been in Bitcoin, every single second that things like this happen. That's where people make their worst mistakes, because they're not making a decision on the 15 years of experience. No, they're executing decisions that are made by the compression of that 15 years of experience. They think it's valid experience, but not when it's compressed like that. It takes on a completely different format. And pressures like this screw that up. And you can't make good decisions. You can say, well, I've been here before. I've been here for 10 years. I know exactly what I'm doing. Yeah, you know exactly what you're doing if everything is calm. And right now, things are not calm. So what do? I don't know. Go on a hike. If it's not cold where you are, or cold enough to where you'll be miserable, go on a nice hike in a park or a forest or something like that. Go touch grass. Cook yourself a nice lunch. Better yet, cook dinner for your family. Go out, find a recipe, go hunt down all the stuff that you need for it, and cook that son of a bitch. Do something else, and I'll see you on the other side. This has been BitcoinAnd, and I'm your host, David Bennett. I hope you enjoyed today's episode, and hope to see you again real soon. Have a great day.